So let's talk about the year 2026. It's shaping up to be a huge test for the global economy. The big question is, will it achieve what we might call escape velocity, breaking free thanks to the power of AI? Or is the immense gravity of global debt going to pull everything crashing right back down to Earth? In this explainer, we're diving into a fascinating report from UBS that uses this exact metaphor to frame the two very different futures ahead of us. The global economy really is at a crossroads. Think of it like this. On one side, you've got this incredible, powerful rocket engine. That's artificial intelligence and all the innovation that comes with it. But on the other side, you've got this massive gravitational pull from soaring debt and all sorts of political uncertainty. This is the central conflict we're going to explore. And to really get what's at stake here, we need to understand this core idea: escape velocity. Now, in physics, it's pretty simple. It's the speed you need to break free from a planet's gravity. For the economy, though, the question is a bit different. It's whether AI can create a productivity boom that's big enough to break free from those typical end-of-cycle forces. Things like high interest rates and slowing demand that usually pull a growing economy back toward a recession. And look, this isn't just some abstract academic debate. This is something that major global institutions, like the Bank for International Settlements, are watching like a hawk. Their whole job is to spot risks to financial stability. So you can be sure the forces we're about to talk about are very, very much on the radar of the world's central bankers. All right, so before we can get to the exciting part, the rocket, we have to understand the gravity. What exactly are these powerful forces trying to keep the economy from ever taking off?
So yeah, what's creating all this economic drag? What's pulling that rocket back down?
Well, here are the big ones. First up, you've got soaring public debt. Then there's inflation that just won't seem to go away, which keeps interest rates high and kind of chokes off growth. We're also seeing this trend of deglobalization, plus a ton of geopolitical uncertainty, which really rattles the markets. And finally, there's just the plain old weight of history, those typical dynamics that tell you an economy is running out of steam and probably heading for a slowdown. Now here's where it gets really interesting, because the report kind of flips this whole metaphor on its head. It points out that government spending itself has already hit its own escape velocity. It's just on this upward path that's incredibly hard to stop, especially in countries with aging populations. And that right there creates a debt problem that just keeps feeding itself. So how do governments deal with this runaway spending? Well, one possibility is something called financial repression. It sounds a little intense, but it's basically a set of policies that, kind of forces money from citizens' savings and pension funds into government bonds. This keeps borrowing costs cheap for the government for sure, but it can really limit choices for investors and distort the entire financial system. Okay, so that's the gravity. Pretty heavy stuff, right? But now let's look at the engine. Is this AI revolution powerful enough to actually overcome all that drag and launch us into a new era of growth? And wow, this chart just illustrates the sheer power we are talking about. Just look at the NASDAQ composite here. That almost vertical climb lately, that is almost entirely driven by the AI boom. It's the perfect picture of all that investor optimism, all that capital just pouring into tech, creating the potential for that economic liftoff. But for this boom to turn into real sustained escape velocity, a few things have to go just right. Think of it like a launch sequence. First, investors have to keep the money flowing into AI. Second, the tech companies have to actually figure out how to make money from all of this cool innovation. And third, and this is a huge one, the world's energy supply has to somehow keep up with the insane power demands of these new technologies. So we've got the engine, we know the launch sequence, but as any astronaut will tell you, the journey to orbit is never completely smooth. There are some serious risks out there that could cause some major mid-flight turbulence and put the whole mission in jeopardy. And this diagram from the UBS report is fantastic because it shows how these risks are all tangled together in this complex web. They aren't just isolated problems. For instance, you can see how there's a line connecting the risk of inflation directly to concerns over public debt. A spike in one can make the other one way worse, creating this cascade effect that could pull the whole system right back down. Okay, risk number one is that the AI engine itself just sputters. This could happen if the hype gets way too far ahead of what's actually possible. If there's too much investment, or if we hit some unexpected roadblocks, we could see a really sharp market correction in the tech sector, which, let's be honest, has been pulling everything else up with it. Risk number two is an old enemy we all know very well:
inflation. If it comes roaring back, central banks would have no choice but to start raising interest rates again. And higher rates, they act like a massive headwind, basically throttling back our main engine right in the middle of the ascent.
Third, what if that gravitational pull of debt becomes a full-blown crisis? Right now, it's kind of a slow, chronic drag on everything, but some kind of shock could trigger a sudden crisis of confidence, where investors start to get seriously worried about whether major governments can actually sustain their debt. That would cause some severe disruption in the markets.
And finally, the fourth major risk is geopolitics. To be specific, a new escalation in the strategic rivalry between the US and China could send shockwaves through the entire global economy, hitting everything from trade and technology all the way to investor confidence.
So there you have it, the full picture. The powerful engine of AI pushing up against the immense gravity of debt, with all this risk of mid-flight turbulence. Let's put it all together and weigh the two main outcomes we might see in 2026.
And this table just lays it all out, side by side, perfectly. In the bull scenario, the optimistic one, the tech boom is the real deal. AI spending stays strong, companies figure out how to make a ton of money from it, and we get a massive productivity boost. The economy actually achieves escape velocity. In the bear scenario, it's the opposite. The AI hype just fades away, one of those risks we talked about blows up, and the traditional end-of-cycle forces, the gravity, they take over, pulling the economy and the markets right back down.
And so that leaves us with the ultimate question for 2026, doesn't it? Are we going to look back on this moment as the liftoff into a brand new economic era, or will it be the year where the gravity of debt and history just proved too strong to overcome once again? That's the question we'll all be watching. Thanks for joining us for this explainer.